Did you know that the average credit score in the US is 711, which is considered good, but not excellent? How about you? Do you know your credit score and what it means for your financial well-being? If you don't, or if you want to improve it, then you're in the right place. In this video, I'm going to talk about a very important topic that affects your financial well-being: your credit score. Your credit score is a number that reflects how well you manage your credit and debt. It ranges from 300 to 850, and the higher it is, the better. Having a good credit score can help you save money on interest, qualify for better loans, and access more financial opportunities. But having a bad credit score can make it harder to get approved for credit, increase your borrowing costs, and limit your options. But don't worry, if you have a low credit score or a high debt, there are ways to improve your situation. In this video, I'm going to share with you 10 practical and proven tips on how to reduce your debt and increase your credit score based on reliable sources. These tips are not magic tricks or quick fixes, but they are effective and realistic strategies that you can apply to your own financial life. So let's get started. Number 10. Pay your bills on time, every time. This is the most important factor in your credit score, and it shows that you are trustworthy and dependable. Paying your bills on time means paying at least the minimum amount due by the due date on your credit cards, loans, utilities, and other bills. If you miss a payment or pay late, it can hurt your score and stay on your credit report for up to 7 years. To avoid this, you can set up automatic payments, reminders, or calendars to help you keep track of your due dates. Number 9. Keep your credit utilization low. This is the percentage of your available credit that you use, and it should be below 30%. For example, if you have a credit card with a $1,000 limit and a $300 balance, your credit utilization is 30%. You can lower your credit utilization by paying off your balances, asking for higher credit limits, or using fewer cards. Keeping your credit utilization low shows that you are not overusing your credit and that you can manage your debt responsibly. Number 8. Check your credit reports for errors and dispute them if you find any. Errors can lower your score and prevent you from getting the best deals. You can get a free credit report once a year from each of the 3 major credit bureaus: Experian, TransUnion, and Equifax. You can also get a free credit report from annualcreditreport.com, the only authorized website for free credit reports. You should review your credit reports carefully and look for any mistakes, such as incorrect personal information, accounts that don't belong to you, or payments that were reported late when they were not. If you find any errors, you can dispute them online, by phone, or by mail with the credit bureau that issued the report. The credit bureau will investigate your claim and correct or remove any inaccurate information. Number 7. Negotiate with your creditors or seek professional help if you have trouble paying your debt. You may be able to lower your interest rates, waive fees, or settle for a lower amount. You can also consider debt consolidation, which is combining your debts into one loan with a lower interest rate and a single payment. If you are struggling with your debt, you should contact your creditors as soon as possible and explain your situation. They may be willing to work with you and offer you some relief. You can also seek professional help from a reputable credit counselor who can help you create a budget, negotiate with your creditors, and enroll you in a debt management plan. You can find a certified credit counselor from the National Foundation for Credit Counseling or the Financial Counseling Association of America. Number 6. Use a secured credit card or a credit builder loan if you have a thin credit file or a bad credit history. These are products that require a deposit or a collateral, and they help you establish or rebuild your credit over time. A secured credit card is a card that is backed by a cash deposit that you make when you open the account. The deposit usually matches your credit limit, and it is refundable if you close the account or upgrade to an unsecured card. A credit builder loan is a loan that you pay back in installments, but you don't get the money until you pay off the loan. The lender reports your payments to the credit bureaus, and you get the money plus interest at the end of the term. You can find a secured credit card or a credit builder loan from a bank, a credit union, or an online lender. Number 5. Pay more than the minimum amount due on your credit cards. This will help you reduce your debt faster, save on interest, and boost your score. Paying the minimum amount due on your credit cards only covers the interest and fees, and it barely reduces your principal balance. This means that you will end up paying more interest over time, and it will take you longer to pay off your debt. To avoid this, you should pay as much as you can afford on your credit cards every month and target the cards with the highest interest rates first. This will lower your balances, increase your available credit, and improve your credit score. Number 4. Avoid applying for too many new credit accounts in a short period. This will generate hard inquiries on your credit report, which can lower your score and signal that you are desperate for credit. A hard inquiry is when a lender checks your credit report when you apply for a new credit account, such as a credit card, a loan, or a mortgage. A hard inquiry can lower your score by a few points, and it can stay on your report for up to 2 years. Applying for too many new credit accounts in a short period can make you look risky to lenders, and it can also reduce your average credit age, which is another factor in your score. To avoid this, you should only apply for credit when you really need it, and space out your applications over time. Number 3. Keep your old accounts open and active. This will increase your credit history length and show that you have a stable relationship with your creditors. Your credit history length is the average age of your credit accounts, and it accounts for 15% of your score. The longer your credit history, the better, because it shows that you have experience and consistency in using credit. Closing your old accounts can shorten your credit history and lower your score. To avoid this, you should keep your old accounts open and use them occasionally, as long as they don't charge you fees or interest. This will also help you maintain a low credit utilization and a good payment history. Number 2. Use credit monitoring tools or apps to track your credit score and get alerts on any changes or issues. This will help you stay on top of your credit situation and take action if needed. Credit monitoring tools or apps are services that provide you with access to your credit score, credit report, and credit alerts. They can help you monitor your credit performance, identify any errors or fraud, and improve your credit habits. Some credit monitoring tools or apps are free, such as Credit Karma, Credit Sesame, or WalletUp. Others may charge a fee, such as Identity Guard, Experian, or TransUnion. Number 1. Educate yourself on credit and debt management. Learn about the factors that affect your credit score, the types of credit products available, and the best practices for using credit wisely. The more you know about credit and debt, the better you can manage your finances and achieve your goals. You can find a lot of useful information and resources online, such as MyFICO, NerdWallet, or The Balance. You can also watch videos, listen to podcasts, read books, or take courses on credit and debt management. The key is to keep learning and improving your credit skills. That's it for today's video. I hope you enjoyed it and learned something new. If you did, please give it a thumbs up and subscribe to my channel for more videos like this. Also, don't forget to share your thoughts and questions in the comments section below. Remember, improving your credit score and reducing your debt is not impossible, but it takes time, effort, and discipline. But the rewards are worth it. So start today and follow these 10 tips, and you will see positive results in your credit and debt situation. Thank you for watching, and I'll see you in the next video. Bye.